How will the CME's new product differ from the CBOE's offering? BK's over at the Plasma to break it all down. Hey, Beeks.
Hey, so let's do it. So here we are. We've got CME futures. What's going to be the difference between these? First of all, CME trades a lot more futures products, more futures trader there. So I would expect heavier volume on this. Secondly, bigger contract size. It's 5 Bitcoin versus 1 Bitcoin. So this will likely be more of an institutional product at this point. So you're going to have bigger ticket sizes in there. And finally, I would expect increased volatility. Remember last weekend, everybody thought that Bitcoin was going to sell off because the futures were coming and global macro funds were going to sell it short. Exact opposite happened. It ripped up 20%. So I'd expect underlying volatility in the spot market this weekend. So now, if you want to trade this, let's go to the tape and let's go to the. We will go to the tape and we're going to look at how we're going to trade the futures, okay? So last week I talked about the 1 contract size. So here's Bitcoin here. You've seen that we've had this rip up here, and we're kind of in a range right now, right? So 1755. So my trade for this is you want to buy the futures about 17,600. Let's say it's Sunday night. You always want to have a stop when you're dealing with futures. So we'll put our stop down about 17,300. That's going to be 200 points, 5 contracts, $1,000. Now, my target is still up above 2,100. Let's call it 2,160 for easy math. That's 4,000 points times 5. That's 20,000. So if you want to trade 1 contract, you can make 20,000 on the upside, lose 1,000 on the downside. But remember, that's a pretty tight stop there, so you might get stopped out quickly. This is going to be very volatile. There's our profits and losses. You can see up to 21.8, you make some nice profits, but always have your stop in.
I mean, this is the kind of trade, Beeks, right? You can't put this in and walk away from your computer.
No.
And that's that.
This is the deep end of the pool, and I really have to make it clear. If you need to make sure you have a stop in futures because they can get away from you. You're using leverage. It's a 5 Bitcoin contract. This is the deep end of the pool.
We're worried about the CBOE's launch. This is going to be, as BK points out, much heavier volume because the CME is just a bigger player. What should we be worried about? Should we be more worried on Monday about what happens?
I think one more player into the mix is only a good thing. I think you're actually going to start to see a little bit more institutional volume. I don't think you're going to see necessarily anything that dramatic than what we've seen. But it's interesting how every time you get a new, essentially, vehicle or conduit or proxy play for Bitcoin, you get another nice bounce in it, which to me means you want to be playing for the next one of those, not for Bitcoin.